Entering and exiting your investments can seem like a task that can either make or break the amount of money you earn or lose. And a lot of people have asked for a video on the subject because it's so difficult to know what's considered right and wrong. So let's dive into how you can increase the amount of money you make and decrease the amount of money you lose with an investment strategy. When people talk about an investment strategy, they usually give out great advice and incredible tips on how to construct and make your own strategy, and for good reason. They are incredibly personal things. Hell, it's almost like asking why you started investing in the first place. But I know when I first started, tips and advice didn't make a cohesive strategy for me, and so it took longer to understand what I was doing. And so in this video, I'm going to give you some great advice and tips, followed by my own personal strategy, which I think is great for newer investors. So let's get straight into it. The best piece of advice I can give you, which I wrote about in my investment guide for beginners on our Discord, where we publish company reports and educational content for free, is for you to be clear and precise about your investing goals. Investing goals can vary, but I'll give you a couple examples. Do you want to create a low maintenance growth portfolio that is low upkeep and lets you get on with day-to-day life? Do you want to be hands-on and create a growth portfolio that you can monitor and watch grow day to day? Or do you want to invest in companies short-term for a big rise and then reinvest profits elsewhere? Different goals require different types of investment strategies, so make sure to match your strategy to the objectives you've set out for yourself. You want to exercise your advantage of being an amateur. It might sound silly, but when you're fresh to the stock market and trying to build an investing strategy, being an amateur gives you that little bit of freedom that when you start, you are fully applied and wanting to succeed. So even though it might sound hazy, use that to maximize the amount of knowledge you gain within that period of being an amateur. Join Discord groups, shameless plug, read up on investing, study the experts, look for advice, start conversations, and watch YouTube videos. Do anything in your power to learn the craft, and it will pay dividends in the future. When I first started, I was like a sponge, and now my account has grown over 900%, and I've started this channel and my Discord to aid in doing the exact same, in helping you guys do the same as I did, and to maximize your success as soon as possible. When you're new to investing, I cannot urge enough how important it is to start in the long game. By which I mean learn how to invest for the long term. It's true that positions can make significant short-term gains, but they also collapse and fall twice as fast. And when you're a beginner, I know for a fact that I didn't know what was happening or why in the stock market. So learning the long game is invaluable. Placing yourself into 2 or 3 stocks that you believe in, and simply sitting back and watching the stocks move gives you an amazing insight as to how the stock market isn't random and how stocks move based on catalysts. This is how you learn the long game and understand how the stock market works. So start early, set your goals, don't be impatient, and don't panic. Remember that momentary setbacks or red days are normal and acceptable. So now we get into the nitty-gritty. We'll start with getting into a stock and establishing that first position, as it really is where your journey with the stock begins. I always personally try to go with the phrase, it's good getting a decent price on a great stock, but it's excellent getting a cheap price on a great stock. By which I mean if you can find an undervalued stock and get an incredible first price on it, even if you're just establishing a beginner position, you're setting yourself up for success. So let's assume we found a great stock at a reasonable price and we want to establish a position. This is where one of the strongest bits of advice I can give you come into play. When starting a position in a stock, come up with the total amount you want to put into that stock. Ideally 10% of your total portfolio for diversification purposes, and then split this amount into thirds. Establish your first third into the stock and then give it some time to see how the stock price is progressing. If the stock is showing strength and consolidating over the next few hours, up to a day, put another third of your amount in. Or even better, if the stock falls, do the exact same and do what's called averaging down, which brings your total price lower. Then wait a little more and see how the stock reacts, and then finalize your position by putting in your remaining third. These time frames on waiting can be adjusted to the particular investor. So just take this as an example. But why do we do this? Well, we want to see whether the stock we are investing in has legs and room to grow. By establishing our first position, we get a foothold into the stock. By seeing how the stock progresses, it gives us a chance to average down or put more funds in to increase our total position. And then by rounding off our position, we can finalize it and attempt to average down or up if the stock is moving well and showing signs of growth. This strategy mitigates risk involved in establishing our position and gives us the option to get a better price if the stock falls. Don't try to time the market. If you're in our Discord, you've heard this time and time again. Timing the market leads to you losing out on potential of a stock. I recently had this shared in one of our chats and it got so many reactions because of how true it is. In investing, always remember, Rome wasn't built in a day. In trading, always remember that Hiroshima and Nagasaki were destroyed in a day. By this, I don't want to dissuade you from trading in the future, but when you're just starting out, like I've mentioned, being in the long game will teach you the value of investing and teach you the core principles as to why being within the market will show you the relative experience that you need. Trying to time the market as a newcomer to investing is treating the stock market almost like a glorified slot machine. Investing can go through down days and red days, but if you're in strong stocks and nothing has changed your thesis on the stocks, it is all part of the natural way stocks work and it's nothing to worry about. Try and shelve your emotions. Trading can have similar emotional consequences as following a sports team, and in some ways this can be utilized, like when we spoke about the perks of being an amateur. But they can also lead to irrational and expensive mistakes, such as bailing out of a stock when it's 10% down, and thus making a loss. The best way to try and keep these emotions in check, apart from experience, which gives you solace in your investing strategy, is to talk with like-minded people, or be calm and collected and sit back and relax in your investing strategy through not looking at the stock market more than twice a day. As a beginner, you'll focus on every little micro movement of a stock, but my advice is to look at it max once or twice a day, usually just to check on averaging down if the opportunity presents itself, and try to separate your emotions by keeping busy elsewhere, be it hobbies, anything. Just set your mind apart. And now, getting out of the stock. This one is possibly the most personal part of your investing strategy because it is totally dependent on your opinion on the stock's value and growth potential. It is best to try and set a goal for a stock of which you will take a certain amount of profit when it reaches this goal. For example, if you invest into a stock at $10 and you think it has the potential to hit $20 in the future, you could plan to take out a certain amount of your investment when it reaches this goal, to lock in those profits and reinvest. You could take out your initial investment and leave the rest to run, or you could take out a little more because it's totally up to your own due diligence on the risk reward you see in the stock. As my main example, I will talk about BNGO or Bionanogenomics. I bought 300 shares of Bingo at $2.86, with the belief that I saw it hitting $7.50 from being severely undervalued. As this was based on my own analysis, I saw it as quite a risky play when it started reaching higher numbers around $8. And although it is a great growth company, I simply wanted to reinvest my profits over the next few months. And so I sold 100 shares at $6.86 for £505 with 295 going to profit to start weaning my profits and mitigating risk. Some days later, I finalized my position, selling 200 shares for $7.77 and $7.23 respectively, making £567 and £528 for a combined £700 profit, thus closing out of my position and sticking to my trading plan and exercising my investing strategy almost perfectly. This example is quite precise, and it shows you the power of having a plan, sticking to it, and showing how powerful it can be. Now for the investment strategy template that I would personally urge any beginner to take a look at and see if it suits them. I've tried to make the general concept as simple as possible so it can be altered to varying levels of risk reward, but as a newer investor, this should be perfect, and it's simplified into a 7-step guide. First, find a stock with great potential. I have videos teaching this, and on our Discord, it is constantly filled with company reports and guides on where to find them. 2. Never buy after a huge run-up. FOMO is a killer, and for that reason, if a stock has a run, let it consolidate first. If the stock is consolidating, you can move on to the next stage. 3. Invest your initial third of what you're wanting to invest into the company, and then let the stock settle for some time. Then try to average down or up if the stock is moving suitably either way with your second third. Then with your remaining third, average up if the stock has had some recent catalyst news, or average down to get a better average, and finalize your full position based on these ideas. 4. Let the stock grow. Don't let emotions get the better of you. If you're in the stock and the price falls, don't let this discourage you. This could be due to any amount of factors. 5. Diversify your portfolio. Try not to get too focused on certain sectors within the market. Use the above tips on different sectors to make your portfolio stronger. 6. When the time comes to sell, have the amount you want to gain out of it planned. This could be a rise of 20%, 50%, 100% or more, but have the goal set out. When it reaches this increase, secure your gains by whatever amount you feel suits your risk reward. You could take out the whole amount, more, but try not to skim small amounts, as it tends to make little impact on your risk reward thesis. 7. If you want to fully exit a stock, there is absolutely no problem in doing so. This is your portfolio, no one else's. If you feel safer finishing your position and moving on to the next stock, it is your investing strategy. If you prefer to leave at least a little amount of money in a stock, even when you have taken a great amount of profit, this is also absolutely fine. This is where investing gets very personal, and there is no right or wrong, only opinion. Now, it's important to know I haven't written these down, as I want you to write it down for yourself. This could be on the PC, on a notepad, anything. Just so it takes a place in your memory and gets you thinking about your strategy with every investment. And finally, within my Discord, I have tediously made an incredible stock journal for beginners to track their stocks in both the US stock market and the UK stock market. It is linked and pinned in the Discord, so join if you'd like to access it and use it alongside your investing strategy. I hope you all enjoyed the video. This video was a little tedious to make, as investing strategies and getting in and out of stocks is a heavily personal thing. But with the recent tips, tricks, and the investment strategy, I hope the video has been some use to you. If you don't mind clicking that like and subscribe button, I would be over the moon. And for now, this is DD-Bae signing off.